Hey, good night, guys. It is Tuesday, July the 6th. It's 11:29 p.m., almost Wednesday, July the 7th. Um, Here, finishing up my analysis for the day uh, and my trades taken for the day. I'm actually going to go through them with you right now. Um, this is really for me, again, in these videos to review trades, for you guys to see my style of trading, and also to see where I may have gone wrong, uh, and see where I can improve for the following day in terms of trading. So generally the pairs that I trade, it's GJ, and I also trade uh, gold. So those are the two pairs that I trade. All right. So following the previous video that I would have done on the page, I would have taken a gold by which worked out. We kind of had a 3 pip loss at first, and then we came back on. We got a profitable trade at the end. So moving into the 6th, which is today now, we had two trades today. To be honest, one very bad trade. One very bad trade while I was getting ready to go over to work. I actually took the trade. Let's go over to. We got both on goal, so I'm gonna change one to GJ. But yeah. So on my way to work, and maybe I should start with the news that we had today first. So today in news we had the ISM services paid. We had the market services PMI. We also had the ISS services new orders, the ISM services employment index, and we also had the ISM services PMI. With this seeming to be the most important of them all, what investors will be looking at to dictate um, what we do in terms of projections for tapering. For example, when we're using this sort of economic data, um, and you could see the times that they're coming out at 10 Eastern time. But what I was saying there just was when you get this kind of data, you are looking to see generally with PMI figures and the ISM services employment prices paid, those indexes, you always find that if you get a consistent, well, any price at over 50 is generally good and is showing that it is a perfectly and functioning economy. Increases on that shows that the economy is performing better than we thought, and that comes down to the actual the previous, the consensus and actual. So for example, if you had a previous that was 63.9 and the consensus is saying that you should get 64, and then the actual actually turns to 65, then that is good for the economy. That's good for the US dollar, which in terms puts various pressure onto gold pairs like gold. When the US dollar is performing good, you find that uh, pairs such as the yen, the safe havens, find that people are less inclined to invest in safe havens, and they tend to go into more riskier assets. So if it's bad news, it's the complete opposite. You find that you have a push in gold due to the fear. You find that you have a push in safe havens, and your stock market usually goes depending on uh, the strength or the weakness of the dollar. For example, the stock market relies on a weakish dollar because, oh, I shouldn't say that, but the stock market does depend on the monetary rates issued by the Feds. So if the Feds continue to provide stimulus to people, the the indices such as US 30, the Dow Jones, those and NASDAQ, all of those are going to continue to increase because there's no fear in the stock market for prices to be drawn back. Uh, the reason that that happens, the reason that that happens in the stock market is the reason that that happens in the stock market is mainly because the stock market deals a lot with projections for the future, and when projecting their prices and their valuations of their companies for the future, if there is ever a situation which will happen of tapering, tapering actually increases the lending rate for these companies that are actually in the US 30, the Nasdaq, etc. So what that does in return, it gives it gives them a lesser amount to project in the future when the US dollar, in terms of its plentifulness right now, is actually wheeled in and there's less for them to basically be able to use or to be able to borrow. Borrowing rates are higher, which means that eventually results in lower profits. Anyway, we're going to continue from here. We sorry people going off the key there. We are going to look at and these things are going to get smoother as we go through. So leading up to the day, as I said, we had two trades. We had these right here for the news for the day. As you can see, we basically waited around for a trade around 9:10. Yep, waiting for the PMI to come through. Yeah, and when they came through, we actually got really bad results. The prices actually were really indexes actually were really bad. And this economic data was really bad for the US dollar. Unfortunately, we did not see that actually turn up in the US dollar. The US dollar to me kept its strength. Let's look at the 30-minute around that sort of time. So let's see here. This is around 10. So 10, we kind of had a rangy candle. Oh, sorry. 10 is right here. So 10, we actually had a very, very strong bullish candle. Uh, the reason I can explain for this is that people actually invested in the US dollar as a safe haven because we know the US dollar is a safe haven at this time, and people used it for that purpose, trying to hide their money in a currency that is not bleeding of sorts. So yeah, so we have that, and you know, the US dollar, the yen, the Swiss franc, those are always, especially for their low yielding natures, are very good areas and currencies to hold your currencies in as an investor, your basket of currencies in, while the market is going through a risk off sentiment. So as we continue here, I'll show you quickly. We don't want us to get too long, where we would have taken the trade today. So trades taken today, I did take on pound yen. So yesterday, remember, if we keep it up, yesterday was gold and today was pound yen. So come we look here, I took a GJ I took a DJ buy at 153.519. Right? And this is gonna be around 153. 153.519. So this level here. Let's see if we can find it. Only 1 minute. All right. So check this out. This trade actually here, I actually didn't take this trade. This is actually a trade that I actually had jot out. I actually adjusted this here, but at that time we did have right here where we created a new low. It was a breakout, and a retest. And I said that if it did break above this consolidation right here, which it did with this candle, that I would take the trade up. That was running around um, with my stops right here, very small stop, because if it broke back into this zone here, this area, I was willing to close my trade. Very tight stop loss, and that worked out. But that's not where I took my trade. I actually took my trade on this candle right here. Mistake that I made with this is that I actually took my trade. This is all things that came after with the drop, but that was not there. This was the only trend line that we had, and I took a trade there with the anticipation that that was going to close a bullish candle and that we would have continued up above 153.5. It didn't happen. It closed back in, and then it did a big drop from there. Um, I actually was getting ready for work also, so when it came back and when it went back above, it actually created a nice double bottom here. This is double bottom. It still went back up and rejected again. So we had one, two, three rejections of 153.5. We then had bullish confirmed candles coming down, coming out of that coming out of this mini bullish structure right here, retesting there, coming down this candle, and you can only extend this if you break below here, and you did, and we got that move straight back down um to basically where our first entry should have been that we didn't take. But anyway, on this trade here, I actually did take which was silly. I actually took close to maybe a 17, 18 pip loss with a 0.20 lot size. Anyway, continuing, price came all the way down, came all the way down, and then we had I waited until close to the PMI economic figures to make a decision on another trade. Now, on the other trade, we would have taken from 153.176. To me, these executions weren't fantastic today. These were actually very poor executions. And I'm working on improving those executions. 153.17. So let's get 153.17, which is around here. Yes. So this is the trade that I actually took right here. Yeah, this is definitely a trade that I took. So candle's not failing to break above here. I took a trade here. Um, Hopefully giving myself enough time to get into this trade. Uh, Price did do a pullback, didn't break above, came back down, and from the PMI news, which was pretty bad, that actually gives safe haven, as I explained, safe haven currencies like Pong, uh, the Swiss franc, and the US dollar strength. So with all of that negativity in the headlines, we just had a straight dump on on pound yen, and the yen was so strong that I actually took it down. I actually ran it 17 pips from the 0.17. So that kind of put me somewhere around 152.98. So that's 152.98, somewhere around here. Yeah, so I took my trade from here to here. And then I closed. I actually could have left runners open to run. I could have left it at 80% because it did run a further, um, well, seems like it ran 50 pips, to be honest. So I could have pulled on to that a little longer. but I didn't. And in the market for me right now, I'm happy with 20 pips. So it's mainly 10 pips for GJ and 20 for gold. So yeah, so that's where I took my trades today. Ran it down to 150, 152.98, somewhere around here. Uh, and I closed for the day. I use a higher lot size on this one the second time, which is a point 0.4. And that was also not a good idea. It was very risky, but it worked out in this trade. And I'll try not to do that again. As I said, these videos are for accountability to snatch out my bad trading habits. If you put it out there publicly to be criticized and scrutinized, then you will make the improvements because you don't want to be deemed an asshole, right? I mean, you don't care what no one says, but at the same time, you don't want to be deemed an asshole. You don't want to be just taking fucking stupid trades, you know? So, so yeah, you want to show that you're a valuable asset. So let's go. Uh, how could I improve those trades? Well, for one, uh, I could have taken this first off instinct. That would have been the 15 pips, touching the other PPL with perfect price level. On this one right here, I could have also waited because I went looking for continuation buys. So I could have also waited for this candle to close. I would have seen that it closed below, and I would not have entered, and I would have been out of all of this uh, pretty early. I maybe would have would have joined here, which I technically did join, and that's where I actually have my other trade. So maybe that's where somewhere where I would have joined to continue going down, and then right the PPLs going down. So yeah, I'm learning to be patient, very patient. I'm learning to wait for the retest. I'm learning for the candle closes about certain zones, and yeah, so overall it's been good. I started this particular account with certain amount. I am already seeing a return already of almost 50, so that's 50%. So let's see how it goes, and yeah, I'll just keep going as every day goes by. I will improve more and more on and I don't know if we can probably show goal for the next day, but what I'm looking at, I have my alert set. I have my alert set at 1:18:03, and I have my alert set at 17:95. So I'm waiting for already close and retest below here and above 18:03. I'm just waiting for the continuation buys, and it closes above there. I will take with the proper price action, continuing with the bullish trend to go up, and I will then look at how it reacts at the previous highs and the key level. Anyway, so that's me for my goal prediction for tomorrow. I've already got them set out already. Just gonna get some sleep now, and that's it. And then I'm gonna see you guys tomorrow when I post another one. Hopefully, I make another trade tomorrow, and we can get something to review. So yeah, see you guys soon. Bye.